Hey guys, it's Mikey Millions here for those of you that don't know me. What I want to talk about in this video is first ask, what in God's name is happening on WallStreetBets right now? How has our beloved sub turned into an echo chamber of poor people yelling at each other who started trading in March 2021 and they think they're all experts on short squeezes? That every stock is a short squeeze, every green candle is a short squeeze, and every red candle is a short ladder attack. The Dunning-Kruger effect in here is beyond anything that we could find acceptable. Now, WallStreetBets was never a sophisticated club of investors, but at least we had some sense. We might have been autists, but we weren't actually stupid. What I'm seeing in here is ridiculous right now. And my goal in this video is to talk about what a short squeeze actually is, talk about how we can identify things that aren't short squeezes, but rather just retail pumps, and encourage people to stop dunking on each other for selling a retail pumped stock that has gained 200% in the last 2 days. CLOV is the quintessential example of this. People thinking that there is a short squeeze happening where no short squeeze exists. I don't think CLOV is under short squeeze. GameStop, yes, definitely. AMC, maybe. I can't speak on GameStop, or on AMC rather, because I don't know if there's a short squeeze happening there or not. But BlackBerry, CLOV, Wish, anything like that, there's no short squeeze here. All right, but if we pop into the, look, we've got a pinned thread right now for just AMC, BlackBerry, and CLOV because there's so much CLOV discussion going on here. And if I control F CLOV, we've got 25 comments in just the last couple of minutes here. It's probably even more than that. If I scroll down a little bit, we're going to see more and more CLOV. 97. Everybody's talking about CLOV. It's Clover Health, for those that don't know for some reason, if you've been living under a rock. Everyone thinks there's a short squeeze happening here. But why don't we go ahead and let's look at what everybody's pointing to when they try to identify this short squeeze. All right, everybody wants to look at this market beat data. All right, 2-week-old information indicating that there are about 41 million shares that are sold short. Okay, 36.7% of the float. That's a lot. For those that don't know what a float is, this means how many shares are available for trading to the public. So Clover Health has released about 113 million shares to be traded on the public market. And they've got additional outstanding shares that can be held, locked down by institutions and untradeable. The company itself could be maintaining them. They could have never been released. That's outstanding shares total. Float size is how many are available trading to the public on a day-to-day basis. We've got 41 million of them, approximately, that were sold short as of May 28th. So people will look at this and say, hey, great opportunity to sell or to buy shares and squeeze the shorts. If we could force the short sellers to cover, we've got 41 million shares that need to be purchased. And that's going to drive the price up. We can short squeeze and gamma squeeze the stock into oblivion and drive down these short sellers. That way we can punish Citadel. We can punish the hedge funds that are rooting against us. All right, but let's look. All right, 41 million shares have been sold short, and we're trying to get them to cover. Well, let's go ahead and look at today's volume. It's 12:23 p.m. right now on June 11th, 2021. The volume, about half of the way in through the trading day, is 96 million. That's more than double the average prior to this pump that's going on. Yesterday's volume was over 120 million, I think, something crazy like that. And it looks like we're even going to bust that today. So tremendous amount of volume going on. All right, what does that mean here? That we are trying to force 41 million shorts to cover, but we've already traded 96 million today. Even if every short seller covered today, that still leaves more than 50 million shares that have been additionally traded on top of that. Yesterday, 120 million shares. The day before that, it was another 120 approximate million. Okay, that is more than the float. The float is 112 million, 113 million. And yesterday we busted that by something like 10 million shares. All right, what does that mean? Does that mean that there's naked shorting going on? That there's more shares being traded than there have ever been issued to the public? What does that mean? All it means is that there's day trading going on. People are buying shares and selling it in the same day. so that there's double volume. Some people are probably buying and selling 10 times in the same day, driving up that volume. All right, this is not a case of naked shorting driving up the volume artificially of the stock. This is just people day trading. More than the float has been traded. I bet you by 2 p.m. today, we'll see more than the float traded today. Way, way, way more than this attempted short squeeze trying to get 41 million shares to cover. Even if you're really drinking the Kool-Aid and saying, hey, over the past 2 weeks, the short volume has more than doubled, we're actually, in reality, as of now, about, let's say 100 million shares shorted. Okay, well, that's being traded, that's going to get traded today. And that was traded yesterday. And this whole idea of we're going to punish the short sellers, we're going to punish the institutions by driving up the price and forcing them to cover at a big loss. Let's look at what's actually happening here for CLOV's institutional ownership. All right, this is a website called Fintel. It'll tell you what's actually going on. Okay, so shares outstanding. Remember, this isn't just the float. This is everybody. This is everything. The institutions own 156 million shares that are not to be traded. They are not part of the float. They are excluded from this float. Okay, 112 million shares. Institutions own more than retailers will ever be able to get their hands on, unless the company were to release more shares to be publicly traded. All right, we have 156 million shares owned by institutions. Out of the 170 that are playing CLOV, 149 own shares only. They have no short positions. They are long. We have four short institutions and 17 that are long and short. So maybe they've shorted shares and then bought calls, or vice versa. If you think that you are harming an institutions overall by driving up the price, trying to hurt these 4 short sellers, and you're going to have a revolution because CLOV is being driven up and is going to force short sellers to cover for a big loss and let retail have its day, you are wrong. All right, what if you say, hey, I don't really care about all the institutions. All right, I don't care about everybody. I just care about Citadel, or I just care about some other organization that I think is immoral. All right, let's look at the biggest shareholders. All right, Vanguard, 2.5 million shares. Another Vanguard fund, 8 million shares. Vanguard again, all these Vanguard funds. All right, but let's, we want Citadel. We want to punish Citadel. All right, Citadel here owns 513,000 shares. They are long CLOV. You are not harming Citadel by buying shares of CLOV. Right? There's no short squeeze happening because the volume is too high for there to be a short squeeze. Short squeeze require one of two things. Either one, a liquidity problem where the short sellers cannot cover because nobody is selling to them. They can't get out of their short position. Forces the price way, way, way up. All right, that's option A. Option B, there is so much share buying and call buying and so many shares sold short that driving the price up is just forcing more short sellers to cover. More short sellers are coming into the market as the price rises, and then they're forced to cover as the price goes up yet further. And then more short sellers at higher prices are forced to cover. And even then, even if you forced every single short seller to cover, let's say at most 100 million shares have been sold short. If you're really drinking the Kool-Aid and you think that short volume has doubled, I mean, I don't, but maybe you do. We're going to hit that by about 2 p.m. If every single short seller has covered. There is no liquidity problem. There is not enough upward pressure on this stock to force the other form of short squeeze. We're just not seeing it. Now, all this said, that doesn't necessarily mean that Clover Health or any of the other meme stocks is a bad investment. That just means that it's not a short squeeze. This is a retail pump. Now, that's okay if you want to buy into a retail pump and then try to sell it and make profit. I encourage you to make your money however you see fit. But here's what I encourage you to do once you start seeing gains on a stock like this. You start seeing gains on Clover Health in your investment, you want to take some profits. Here's how I recommend doing it. And this is what I did with Workhorse and what I did with Wish. In fact, let's go to Wish. All right. This was just another one of those B tier short squeeze type stocks. All right, let's check out Wish over the last 5 days when I traded it. Okay, this is another one of those B tier short squeeze type stocks that everybody was looking for to go to the moon. All right, here's what happened. I actually got into Wish. All right, it was Tuesday morning. I had just come off a night shift. I woke up around 1 p.m. All right, I liked where the stock was going. It was in the middle of a retail pump. It was getting that WSB bug. It was rocketing higher. So I bought 8 calls at approximately $10. Now, when the stock was trading for about $10, I bought calls at the $40 strike because implied volatility was insane. And I paid about $60 per call. It was trading at 60 cents. By the late afternoon, the stock had gone up right before market close. Let's say right at market close, it was about $11.80. Right before the market closed, my calls had doubled in value from 60 cents to $1.20. So I sold half of them and recovered all of my basis. All of the money that I put into Wish, I had recovered. And now I had 4 more calls that I could just ride. I still have those calls. And even though the stock has gone down, implied volatility has gone down, those $40 calls are down 50%. It doesn't matter. I'm still up 25% because I already recovered all of the money that I had put in. I still have 4 more calls. And even though they're down 50%, they're still worth half of what they were before. My overall value, my overall position is still up 25%. Now, if I had diamond hands those calls when I was up 100%, I'd now be down 50% overall on my position. By taking some incremental gains, I was able to protect myself from this drawdown. That doesn't mean I'm out of the stock completely. That just means that I'm protecting myself from losses if this thing screws up. All right, I don't think there's any prospect of a short squeeze here. What we're really seeing these days on WallStreetBets, what we're really seeing here is not people forcing short squeezes. It's retailers buying and driving the price of things up. GameStop's institutional ownership. Okay, out of 553 million institutions trading this thing, 479 are long, 28 are short. Okay, 56.6% of the shares total are owned by institutions. Are you punishing them? Are you punishing them by driving up the price of GameStop? Now, I'm not saying GameStop is a bad investment. I think this is probably one of the better ones. This is a good short squeeze candidate. All right, but who owns this thing? All right, the red, I guess, are the short. Oops. All right, Vanguard. These are all Vanguards. All right, here's some purchases. Here's some sells. All right, Shellback Capital might be actually short. Is Melvin in here? Melvin has puts. Okay, they're not short. They have puts. Largest shareholders include Melvin somehow. All right, Citadel. Citadel owns negative 80. What was that? 22,000 shares. Owns 22,000. Then they have calls and puts. All right, are we punishing Citadel by doing this? All right, Citron in this thing? Citron is out. All right, I think I'm making my point here. I think you guys get it. Last thing I want to say, a little bit of a disclaimer. People are going to probably say that this is FUD or I'm on an institution's bankroll. Neither of those are true. This is not FUD. I'm just telling you what I'm seeing, and I am not nearly important or rich enough to be on an institution's bankroll. All right, I am not short. I am not a short seller. I'm telling you guys what I got, and I'm telling you what I'm seeing. That's all. We'll go ahead and wrap this up. If I shit all over your stock, I'm sorry. I encourage you to keep making money in the way you see fit. Let's just please stop forcing each other this idea that every green candle is a short squeeze. All right, let's be smart about this. Take some gains, make your money, reinvest into something more serious. All right, that's all.